a lot of people are now making the transition to working from home, and much to the chagrin of these developers and the landlords, a lot of companies may not come back. We're talking anywhere between 28 to 30% of the companies that had office holdings in Manhattan may decide to have their workers work remotely from home or from other locations. And we're also seeing an exodus from people leaving the city in record numbers. The question is, given the flexibility and given the state of the pandemic, I think people miss the social aspect. I think people miss, the actual being in an environment conducive to productivity, because that also worries employers as well. How productive can you be at home? And the answer is, the world has changed. And what I think is going to happen is that, yes, workers and people will come back into the city when there's a perceived safety of sorts from the pandemic, where there's a vaccine in place and that they feel safe coming into an environment that has been, whether sanitized or the like. And then the developers and the landlords will start to reap the benefits of people coming back. We could see a disruption in real estate, both commercial and residential, and a new player comes into play simply by what's happening here. So it could be interesting to see, albeit I agree with you that it will cause a lot of trepidation with developers, commercial, residential, and landlords alike. I don't think we're too early. I think the pricing in is already occurring, but what remains to be seen with markets in general, what we've seen since the early 1900s, is that the markets kind of ebb and flow with elections. And, just suffice to say is that there are times where the markets, look at this year, the market's taking off over 27%. The market's taken off this year. And we saw back in 2008, the market actually went down 20+%. The uncertainty is if elections are cast into doubt, that will have a calamitous effect on the market. All right. I don't foresee that happening. What I see happening is that at some point, the postal item has been resolved. The people are going to decide who is the actual best candidate to be in that position of power. And the markets will react anywhere between 5 to 10% on the upside when a new administration comes in, unless they really don't like it or unless they really do like it. So the markets have a notorious history of not caring which person comes into power. Here's the thing. The Fed is doing a ton of things at this point. They have expanded their assets to about $7 trillion. They've launched emergency programs. They have backstop lending programs to different markets. So they're doing all they can. Not all they can, but they have indicated, Jerome Powell has indicated that they stand ready to do even more to help out during this pandemic. So the markets, are just taking this information, digesting it, and investors are saying, where to next? Do we need to go into gold? Do we need to go into tech? Do we need to go into Bitcoin? And that path that they're going to take, I don't foresee money managers taking huge bets at this point in this particular, in any particular direction. They're going to stay diversified. They're going to stay invested. A few of them have indicated to me that they are actually raising their cash. So in order to do that, you have to sell some securities. But this is the case that happens as we start heading into the fall. They have to start declaring gains and losses. And it usually happens between September and October. So once again, uncertainty, The Fed just responding, the markets just responding to the Fed alone isn't the only factor. They're, really concentrated on any slowdowns, joblessness, and basically controlling inflation, because I think that's the Fed's job.